US debt is exploding, the stock market is in a bubble, gold prices are at an all-time high, a collapse is imminent. In this video I'm going to be talking about how to make money and to get rich during the 2026 collapse of the US economy. There are a lot of factors that will contribute to this collapse. I've just alluded to some in my hook, and in this video I'm going to cover why these are a problem, and in the other part of the video I'm going to explain the solutions, how you can benefit from these issues that the US has. Before we get started, subscribe to Tycoon Jack to learn more real life money making strategies. America is in big trouble. Now you might think this is going to be another TDS blame Trump video, but it is both sides of politics over the last 30 years that have contributed to this issue. So it's not about blaming one side when both sides are at fault, and really the blame ultimately lies with the US public for voting in these figures who continually increase the debt. The fact of the matter is that the public of the US don't actually have a problem with the debt. The reason being is that they usually benefit from this debt. A lot of Americans don't pay tax, so you don't have a lot of income coming into the US Treasury, and a lot of Americans also take money from the state. They're quite happy to use welfare, healthcare, public housing, and by no means is that a condemnation of people who need welfare, but what I'm saying is that a lot of Americans do benefit from increasing US debt. A lot of people will blame the US government and just say it's about who you elect, and that because the right people aren't in government, it is the reason for US debt increasing. But both sides are quite happy to increase US debt. Democrats are happy to increase debt so they can give out more welfare and social services, which is a very noble cause. For the right wing, a lot of the debt growth is attributed to good tax cuts, but also military spending. Both sides don't want to offend their voting bases, so no action is going to ever get taken. I remember 10 years ago looking at the debt clock of the US when it was only 20 trillion, and I'm thinking to myself, wow, that's a lot of money. America is going to have a big issue in the future if they don't take care of this problem. Today, US debt is at 38 trillion. There's an assumption by debt hawks that US debt, proportionately to the size of the economy, will be reduced by trying to maintain as much stability and purchasing power of the US dollar. But the reason why the US has been able to grow its debt so much is because the value of the dollar has decreased. A lot of people interface with this through inflation, through price increases. Inflation isn't caused by companies putting up prices, but prices are going up because the dollar is going down. There's absolutely no indication that this will change in the future. The US debt is going to continually increase. The US can't mathematically take care of this issue anymore. It's not possible for it to just cut spending and have only tax revenue coming in and assuming no other expenses whatsoever. The US debt is a runaway train which is picking up pace. Just the interest payments alone are close to $1 trillion. The issue of US government debt is the reason why I believe Trump is so intent on a federal rates cut. On one hand, it benefits him politically with more people having lower interest rates and more credit and money flowing through the economy, but on the other hand, it does save the US government from paying more interest debt, and it can reduce the US deficit just a tiny bit. But because the US already has a lot of debt growth and inflation, they should be increasing interest rates. The trend is now set for an interest rate decrease, with the US Fed just announcing a cut a few weeks ago. This will pick up the pace of inflation, meaning the US dollar is going to continually decrease. It means that the US can keep increasing its debt burden, but in real terms, your real purchasing power is decreasing. It's being eroded away by inflation, which is ultimately to deal with this US debt. So the reason why the US will never repay its debt is because it's just going to decrease the value of the dollar. You can take care of $40 trillion worth of debt by printing $40 trillion worth of currency. Now, that obviously sounds stupid, and it very much is, but it speaks to the principle at play here. They're not going to do that directly, or at least in one hit, but that's how they will deal with the US debt. And once again, America has been doing this for years and decades. This isn't going to stop. Point 2 I want to make is the stock market bubble, driven by AI specifically. As the value of the US dollar decreases, the stock market is going to increase. But that's not so much the stock market increasing for any good reason, such as companies achieving greater profitability or value being created. It gets back to the first point of the US dollar decreasing in value being the reason why the stock market will increase. So the stock market increasing on its own is not a cause for concern, but what is a cause for concern is the recent growth, which is above the rate of inflation. There's absolutely no reason whatsoever for the stock market to be growing, especially during these uncertain times. Tariffs are a big issue. There is no fundamental basis for the stock market to be as confident as it is when the real economy is suffering from inflation caused by tariffs. So there's very much a disconnect between the real economy and the stock market performance. The fact of the matter is that the US is facing deindustrialization even more than it has experienced in the past. The reason for that is increasing electricity prices, which that is going to affect the real US economy, the production side of things. Since 2020, because of data warehouses, electricity prices in the US have increased by about 50%. So on its own right there is a disconnect between the amount of real production happening in the economy versus the performance of the stock market. There are just a few companies in the S&P 500 driving most of the growth. Most companies in the US 500 are completely stagnant, and these are the real economy companies. These are companies which produce, they aren't just in the tech sector and based on speculation. But the problem with AI is that either way there will be a crash. It's a lose-lose situation no matter which way it goes. And that's why the US is screwed. If you assume AI is a success and it goes as investors and the media talks about, which is in very rosy terms about an automated future, the result of that is going to be unemployment, mass unemployment. It's going to be people living on UBI. But that's a bare bones lifestyle for a lot of people. That's the former middle class losing all their purchasing power, their discretionary income, because they're unemployed. They're unemployed and have no discretionary income. How are these companies going to receive any revenue? I think you can see the issue there. And on the other hand, if AI is a failure and the stock market growth recently has been all for nothing, then that's also a reason for the stock market to crash. And keep in mind, the S&P 500, which is the top 500 companies of the US, the publicly traded ones, will decrease a great deal just from a few companies failing, because these top companies are raising the bar for everyone else. When the stock market crashes, there will be a race for investors to go back to fundamentals to look at how profitable a company is. They'll lose the bubble mentality that they have, that growth can continue forever. It goes back to cost cutting and the real economy. Even if you make a moderate assumption that AI is good in certain industries, there's still going to be a decrease in the stock market as AI doesn't meet the hype. Could be still a good technology, but it's not going to revolutionize the future. Either way, no matter how you look at it, whether AI is a success or failure or somewhere in between, there is still going to be a crash. Now, if the stock market decreases, this will also have a relationship with GDP growth or lack thereof. It's likely to cause a recession due to the wealth effect. During good times, when the stock market increases, people feel wealthier, so they're more inclined to spend money that they have because they see their stocks increasing, so they feel wealthier and able to spend money. Like when people's houses go up, they might refinance their mortgage to purchase a new car, for example. But you could very much see the opposite during a recession, where as stocks and real estate values decrease, people feel poorer and are going to rein in their spending. So this will also be a cause for the recession. Either way, the way they deal with these crashes and bubbles is just going to be inflation, the devaluing of the US dollar. In the stock market, you will see this with the Fed put quantitative easing QE as credit floods the stock market and pumps up the values after the crash, even if it's not based on anything, but it lessens the burden and problem of the crash, nominally speaking. And as people see the stocks start to increase again after the crash and their real estate values, they'll feel more confident in the economy, even if in real terms their purchasing power has been eroded. You can see this in 2023 when the stock market started to increase again after it went down 20% in 2022. Even though the stock market has not topped its 2021 peak after you adjust for inflation, people still felt wealthier again, even though its real terms inflation adjusted peak is beneath that of what it achieved in 2021 before the crash in 2022. Inflation, debt growth, printing money is the only way they can actually deal with all these issues when they come up. The US voting base does not care about real terms growth per person. They just want to feel good in the short term, no matter the cost. And that is a very cynical view of the US voting base. People have a bigger problem with deflation and potentially losing their jobs and tighter credit conditions than they do with debt growth and easy credit and money printing. They would rather continue to print money and feel richer on paper than face the reality of savings and needing to put in work, and the idea that you can't just use debt and credit to get any purchase on impulse. The truth is that countries with inflation are able to hold the country together. Zimbabwe, which is a third world undeveloped country, was able to keep the country together despite hyperinflation. Argentina has experienced a lot of inflation in its modern history. Inflation does not mean that the country will collapse. In fact, it can be the more politically stable option when given the choice versus mass unemployment. So those, I believe, are the problems that America has and will start to face in 2026. AI being the likely cause, but the US debt is also very much an issue. In this part of the video, I want to talk about solutions and what you can do to insulate yourself from these problems and to get on the winning side. In fact, this can be an opportunity to make money and to get rich. So I want you to think about how you can get on the winning side of inflation. Who are the people that are most affected by inflation? The losers of inflation are savers, people who just hold their currency, perhaps earning a fixed interest amount over the course of a year. The second loser of inflation are people with adjustable rate forms of debt, whether it's mortgages, car loans, or perhaps personal loans. The winners of inflation are asset holders. So these are people who own real estate, stocks, commodities such as gold. Inflation for these assets benefits the asset holder as the value of their assets increase naturally with the rate of inflation, or as the value of the dollar decreases. So it's not so much that the value of these assets are what are increasing as it is the value of the currency decreasing and the price nominally increasing. But in fact, if inflation does get bad enough, just owning anything at all, anything that you can get your hands on, can be beneficial. Even owning a car can be beneficial as an inflation hedge. Worst case, it's something that you can trade and barter. It's something that people desire and will have a value to it. In Argentina, for instance, looking into the inflation situation there, a lot of people end up hoarding furniture as it's something they can get their hands on and just store inside their houses, and it works as a savings account in effect. So your goal should be to get your hands on as much assets as possible. Anything that is not currency, assuming the whole thing is going to be eroded away by hyperinflation. People have experience with this over 2020, 2021, where they talked about the car market. People spoke of how the value of their used cars, their second-hand cars, have increased. There's a lot of complaints about the car market not being as cheap as it once was before the pandemic, but that's inflation. That's the reality of the situation. It's not so much that the value of those cars have increased as it is the value of the dollar decreasing. Something else you should think about is not just how to preserve wealth, but how to create wealth. The issue I have with a lot of gold bugs and a lot of YouTube analysts out there is that they just talk about how to preserve wealth, but they don't understand that you need to also be able to create wealth. In the short term, purchasing gold and holding gold and then using gold immediately works as a good bridge in the short term. But then it comes to a point where you're going to run out of gold. You're going to spend it all, and then what? So your goal here should be to think about not just how you can preserve wealth, but what are you going to be able to offer when it all turns to custard, so that you can keep bringing money in. Even though it's going to be eroded away, you still need to keep up with the cost of living and your outflows, even though in the long term it's going to be a fruitless endeavour. But that's what you're going to need to be able to do in order to survive. I mean, we have plenty of examples out there of what happens when an economy crashes. What do people do? And the answer isn't necessarily gold. They tend to run to other currencies and to start using them in their own countries, thinking about Russia, North Korea, Zimbabwe, Argentina. When the value of their currency collapsed, they ended up just using other currencies of different countries. So North Korea, Zimbabwe, Argentina, they tend to use the US dollar quite a lot. It might be the case that you need to diversify into other countries' currencies in the short term to get you through it. Gold might not necessarily be accessible or the answer for you, but you can also very much learn from the collapse of those countries which I've mentioned and what they did during their economic crash. And they all did the same thing fundamentally. They went to market principles. So you need to learn how to buy and sell, and you need to think about what you can offer and put out there so that you can start making money. So really you need to think about your survival streams of income, money that you can bring in when it all turns to custard, and purchasing power of your currency just is not enough. What can you do to earn outside of that currency alternatively? The more you can offer, the more you can put out there, the better your earning potential will be after the collapse. What are practical things you can do in order to survive? And even after the collapse, I believe that there will be opportunities out there to make money, and eventually things will go back to normal. I mean, we're talking about an extreme situation here. I'm using extreme examples here to make a point. The US has dealt with inflation before during the 70s and 80s, and it's still here. And eventually things do return back to normal, and that's still 10% inflation per year, and that might be what the US experiences. The whole thing's a scale between a little bit inflation and a full out collapse on the other end. So fundamentally, I believe that being a US asset holder, even though in the short term there's going to be fluctuations, is not a losing bet. Absolutely, in the short term, I believe the stock market will crash, and I say that as someone who has money in the stock market. But over the long term, you only have to look at the trend. Money supply will increase, profits will increase over the long term. The market will shed bad companies, even though there's going to be pain, and real growth will occur, and the value of the stock market will increase. So really, you just need to think about ways you can grin and bear the short term. Most realistically, there will be a stock market crash, and there's going to be inflation. So how can you grin and bear 10-20% inflation in 1 year? What are things you can do to protect your assets? You might need to reduce your exposure to savings if you have much. If you look at it from a more moderate perspective, it's going to be a great opportunity to pick up assets. So on the other hand, keeping cash can be quite detrimental, but if the crash is bad enough, you can pick up some great assets at a great price and just hold on to them and ride the wave back up. Whereas if you purchase assets now using your currency just to get rid of the currency you have to prepare yourself for the crash, you're going to be part of the crash. You're going to deal with problems in the short term, so you're going to lose out from this crash. But over the long term, if you can hold and grin and bear it, you will be able to survive. You must look at it from a long-term perspective. Over the last 100 years, the US stock market and real estate values have increased. Money supply has increased. Short term, we're just trending above the mean, but there's going to be a mean reversion in values, but the trend is that it always will continually increase. So you might be curious about what I am doing to prepare for this crash, and you might be surprised by my answer. What I am doing is continuing to invest in the stock market. About 70% of my net worth is exposed to the stock market, the US 500 specifically. The reason for this is because it's an accessible asset, and I am holding on for the long term, and I absolutely expect a big crash to come. But I think the facts are clear that over the long term, the stock market will continue to increase. And if you take a decade-long outlook on the stock market, it will be fine. But I do believe that will mostly be inflation from the recovery. But I still want to be part of that growth and holding nominal currency and sitting by the sidelines. Truthfully, I'm not sure when the stock market will truly crash, when the chickens will come home to roost. The stock markets could increase another 20% next year. I don't think that is likely with Orange Man and others specifically. The stock market has had unexpected pretty good growth this year as it is. I think there will be a correction to come. So in conclusion, either way, we're going to be effed sooner or later. Subscribe to Tycoon Jack.